NIO stock must buy, sell now, or hold. NIO has been generating waves for excitement across financial markets. The buzz surrounding NIO stock is undeniable. Its journey has been nothing short of a roller coaster ride. It's a stock that's been riding the tides of significant price fluctuations, captivating the attention of both seasoned investors and those new to the game. In this video, we'll dive into the heart of the matter to answer the burning question: is NIO a must-buy, sell now, or hold? Firstly, NIO faced tough times dealing with production hurdles caused by pandemic-included shutdowns and disruptions in the supply chain. This held back their growth in the last year. But don't blink, because things have taken a turn. Lately, they've been rocking the stage by ramping up the delivery of their electric vehicles. Yet, here's the twist. This year, NIO stepped up and announced that they're slashing car prices and hitting pause on splurging for business expansion and research. They're doing this dance to handle the cash flow crunch caused by a dip in car deliveries. Now, before we proceed, we would like to welcome you to Capitalista. Kindly take a moment to click on the like and subscribe buttons down below. Now, let's continue. Experts over at China Merchants Bank International chimed in, highlighting a new challenge on NIO's horizon. They pointed out that the company finds itself at a crossroads, caught between defining its brand identity and ensuring profitability. This tricky situation arises as NIO trims down its service perks, a move that could potentially deal a harsh blow to its brand reputation. It could also lead to even steeper drops in sales than initially anticipated. While NIO does exhibit promise for sustained expansion down the road, its immediate outlook is clouded by two main factors: the ramped-up rivalry in the market and the company's constrained portion of the market share. Now let's dive into key numbers that highlight the reasons behind the negative outlook on this stock. The data gathered lays bare the downhill side of NIO's net income over the past year. From September 30, 2020 to March 31, 2023, NIO's trailing 12-month net income showcased an undeniable downtrend. Starting at a whopping $6.77 billion in September 2020, it experienced small ups and downs before taking a consistent downward path. Though there were fleeting moments when NIO's net income showed signs of improvement, the prevailing trend leaned heavily toward deeper losses as 2023 dawned. In December 2020, the net income stood at negative $5.30 billion. By September 2021, a minor improvement brought it to $3.26 billion. As of June 2022, a staggering loss of $7.38 billion was reported. This escalated to an even higher loss of $14.28 billion by December 2022, and by March 2023, the net income plummeted to a daunting negative $17.25 billion. The trend points to a consistent rise in NIO's losses. From September 2020 to March 2023, NIO's net income plunged around 154%, showing a big yearly growth hit. While this setback grabs attention, it's crucial to investigate potential factors like higher operating expenses or lower revenues that might have played a role. In addition, NIO's trailing 12-month revenue has been on a remarkable upward trajectory in recent years, as seen by analyzing its quarterly records. Here's the rundown. As of September 30, 2020, the revenue stood at about $1.89 billion, with a minor fluctuation of around $1.88 billion in the same quarter. By December 31, 2020, the revenue surged significantly to reach approximately $2.47 billion to $2.50 billion. The momentum continued into the first quarter of 2021, with earnings skyrocketing to roughly $3.52 billion by March 31, and it further expands to about $4.26 billion by June 30. This upward trend persisted, and by September 30, 2021, the revenue hits around $5.13 billion. Followed by an increase to approximately $5.64 billion to $5.73 billion by December 31, 2021. While encountering some intermittent drops and pauses throughout 2022, the most recent available data from December 31, 2022 showcased an impressive surge. It reached around $7.14 billion and $7.15 billion. Nevertheless, there was a slight dip in the first quarter of 2023. Recording the revenue as $7.3 billion on March 31. In sum, from the initial figures of the analyzed period to latest available data, NIO's revenue has demonstrated a substantial and notable growth rate. Moreover, NIO's gross margin has displayed varying patterns in recent years. As of September 30, 2020, the company's gross margin stood at modest 3.8%. However, this was just the beginning. By the time December 31, 2020 rolled around, there was a remarkable surge with the percentage skyrocketing more than threefold to an impressive 11.5%. The upward trajectory didn't stop there. The momentum spilled over into 2021, witnessing a continued ascent. By March 31, the gross margin reached a commendable 15.7%. This climb persisted, pushing the figures even higher to 17.6% by June 30, ultimately reaching its pinnacle at an astonishing 19.1% by September 30. But as the saying goes, what goes up must come down. And by December 31, 2021, the margin experienced a slight dip, settling at a still respectable 18.9%. Unfortunately, this downward trend persisted well into the following year, with the number sliding to 17.6% by March 31, a further drop to 16.2% by June 30, and then a more pronounced decrease reaching 14.4% by September 30. The descent proved relentless, culminating in a substantial plummet by the close of 2022. As the clock struck December 31, the gross margin had drastically fallen to a mere 10.4%. The trend continued into the initial quarter of 2023, with the margin experiencing yet another reduction, weighing it at a meager 7.7% as of March 31. The journey of NIO's gross margin over these years can be likened to a thrilling narrative, with its ups and downs creating an intricate tale of financial performance. We can see a clear trend when focusing on recent data. NIO's gross margin had been steadily growing from late 2020 up until late 2021. However, things have taken a different turn since then. The most recent figure, standing at 7.7%, shows a significant drop compared to the high point of 19.1% noted in September 2021. This translates to a substantial decline of around 60%. Looking at the span from September 30, 2020 to March 31, 2023, there's an overall improvement, with the initial 3.8% figure rising to the present 7.7%. Despite this consistent downward trend should raise some caution flags for the future. As for NIO's asset turnover data, it has shown a gradual dip over the last 3 years, punctuated by occasional highs and lows. In September 2020, the asset turnover value kicked off at 0.57. Following that, a minor dip occurred in June 2021, marking 0.512. Moving to September 2021, there was a marginal uptick reaching 0.525. By December 2021, the figure experienced a minor drop to 0.519. A notable low point emerged in June 2022, hitting 0.479. However, December 2022 brought a resurgence, reaching a peak of 0.527. The latest entry in the series from March 2023 stands at 0.532. On the whole, measuring from September 2020 to March 2023, the growth rate reveals a decline of approximately 6.67%. Furthermore, NIO stock embarked on a lively journey from February 2023 to August 2023, revealing an exciting surge in the last 2 months. In February, the stock took a leap, edging up from $10.24 on February 10 to $10.27 on February 17. It soon dipped, settling at $9.83 by month end. March saw a slight dip initially, with the price descending from $19.18 on March 3 to $8.36 on March 17. However, it staged a recovery, closing at $9.74 by March's end. April followed suit with its oscillating nature. It began at $9.28 on April 6, touched $9.2 on April 14, then declined to $7.92 by April's close. Early May brought a brief upturn, peaking at $8.17 on May 12, then dipping to $7.98 on May 19, and slightly rebounding to $8.12 by May's end. June started at $7.52 and showcased a roller coaster, hitting $9.09 by June 16, slipping to $8.98 by June 23, and finally reaching $9.23 by month end. But the real show began in July with an unstoppable surge. The ascent kicked off at $9.97 on July 7 and skyrocketed to a remarkable $12.94 by July 28. August continued the exhilarating ride, hitting a peak of $14.99 on August 4, concluding at $14.7 on August 8. While the stock exhibited some ups and downs from February to June, an unmistakable surge began in July, carrying through to August, defining a spectacular trend for NIO's share price. Finally, NIO has garnered an overall F rating, a verdict that translates vigorously to a strong sell based on our POWR rating system. Within the arena of auto and vehicle manufacturers, it perched dismally at 52nd spot out of a mere 56 stocks. Back on February 11, 2023, NIO found itself nestled at the 51st position. As March unfolded, a slight deterioration was witnessed, a descent to ranks 53 and 55 during the weeks of March 4 and March 11 respectively. Yet a recovery to rank 51 ensued by March 25. Come April 2023, there was a feeble rise as NIO inched up to rank 49 on April 15, only to regress to rank 50 by April 22. The tumultuous dance continued into May, hitting a low of rank 52 by May 20. June maintained a steady tempo, with NIO's rank mostly swaying between 52 and 53, briefly spiking to 54 on June 10. A sunnier July brought a promise, pushing NIO to rise to rank 46 by July 22, hinting at an ameliorated stance within the category. Yet August dashes these hopes, the latest recording on August 8, 2023 having NIO retreat to rank 52. So when it comes to NIO stock, finding the right path isn't about quick judgments, it's about balance. Before you leap, take a breath, dive into the numbers, dig deep into the trends. But don't stop there, seek the wisdom of those who navigate these waters daily. Now the question is NIO a buy, sell, or hold for you? Share your thoughts in the comment section down below. If you found this video helpful, don't forget to like, subscribe to Capitalista, and share it with others. Together we can all strive for financial success. See you next time and stay safe.